All right, guys, we're back with the second half of the trades for the month of May. If you did not watch the first part of this video, then it's not going to make a whole lot of sense on what I'm doing, so I'd highly recommend going back and checking the first video. I will put a link below this one if you're watching on YouTube. If you're watching it on our site, daytradingforexlive.com, you'll find a link on that to part one of the video as well, or it may be on the same post. So anyways, we'll carry on. Remember, we finished up with the 11th of May in the last video. We're starting with the 12th of May now. 12th of May, our first trade was on the pound, or the first trade that we'll cover there was on the pound, and it was from the level. And just as a refresher, at the end of the last video, we were sitting up roughly. I shouldn't say roughly. We were sitting up 13% on the month at the 11th of May, so that brings us to the 12th of May, and the first trade again was from 156.94, one spot 56.94, and that is from right here. So what we had from 56.94 was during the New York session. Later in the New York session, we get our break, we get our confirmation down here. So here's ultimately our stop run candle. Here's our confirmation candle. Here's our pullback. And this trade netted roughly right around the 2.5% mark. Okay, so that takes us from the 13 mark to 15.5% up for the month, 15.5% again. And then we go over to the euro, and we have a trade on the euro. It was a short setup on the euro as well, and that's from 11.91 on again the 12th of May. So 11.91 is right here. This was our pre-selected point was 11.91. We come into that level, we get our stop run, we get our confirmation back down. We get our confirmation back down when we get as much pullback as we wanted on that trade. Obviously, when you're going to get stopped out, you're obviously going to get as much pullback as you want. And when I say pullback, what I mean is we wait for some pullback before initiating the entry. Again, there's a whole rule set involved in that, but that just simply gives us the risk reward we're looking for. But anyways, as you can see, we get stopped out on that. That takes us back down to 13.5% for the month overall. And that was it for the day. That was it for the 12th of May. We continue on. Let's go to the next day, 14th of May, actually 2 days later. We had a long setup from 1394 on the 14th of May. Okay, so we had our long setup again from 1394. 1394 is right here. 1384. So we have a setup here from 1384. Basically what we had is we had a break through this level. We came in, we tested the backside of this point. We get our confirmation up, we get our pullback, and this trade ultimately was closed out at the 8 o'clock open. Ultimately, from where the entry was, put us up somewhere plus 30 or so pips, and that was roughly right around right around 3% gain overall for that trade. And what that does, that brings us up to 16.5% for the month currently at that point after that trade. And then on this same day, what we had is we had a nice trade in the pound. This was actually a room trade as well. And when I say a room trade, as a member of DTFL, we run a room twice per week on Tuesday and Thursday. On Tuesday, it's run during the London session and New York, and then on Thursday, it's run during New York and London as well. And every session is recorded for those that can't attend. But anyways, this was again a room trade. It was during our room, and we had a stop run of this upper level. The level that we were looking at was 5,800, big psychological barrier, and this was the stop run. We got the confirmation right at the beginning of the New York session. Then we got the pullback on the news, and it was a nice overall trade. Really nice trade. Ended up pushing off to the downside, hitting a full take profit for 4%, and that brought us up to 20.5% for the month at the end of that trade. And that brings us to the next day, or the next trade, which was on the 17th, and it was on the euro. So we go forward to the 17th. And this is again, it was on the euro. So on this trade from 1443, what we had is we had this huge surge into one of our levels. I really didn't expect to get there, but we got there, and we had a confirmation down. After we got that confirmation down, we got the pullback for the entry. Now this just tagged where our entry point was, and so at the end of this candle here, that put us up roughly around 25 or 26 pips. Now for most people, that's your break-even point, or where you're going to start to potentially move that to break even if it wasn't. What we had supporting that as well is we had a stop run of the backside of this breakout point. So we created a stop run of the backside of that breakout point and actually confirmed up all the way over here. Now, I would normally have considered taking that trade long if it was within tradable hours. This is just outside our tradable hours. That's what kind of worried me at that point. But nonetheless, was the catalyst to move to break even, and ultimately was a break even trade there. And that left us still at 20.5% for the month. Continue on to the next day. This is the 21st of May, the next trading day, that is. 21st of May, it was a short from 1164. This is, again, 21st of May, 1164, one spot 1164. And we had what we term as a stop run on a stop run. So we get our break. You get our break here. We get our confirmation down. We get the pullback for the entry. Unfortunately, it just comes back for a deeper stop run. This was the stop run level, no doubt about it. It just comes back for a deeper stop run. Tags us out for a 2% loss. Takes us from 20.5% on the month overall back down to 18.5% on the month. And we continue on to the next trade. The next trade was on the 26th of May, and we're getting close to the end here. So we go to the 26th. In the 26th of May, we had a short from 0934. 0934, we'll drag this level up here to 0934. And this was a very familiar trade we've seen a few times this month. A backside of the level trade, a backside of a breakout point, comes up, creates a break, confirms down, provides the pullback on the following candle, and this trade runs off to the downside from there. Now, on this trade, ultimately, the nice thing about this, or the unique thing about this trade, I should say, was that we had 8:30 news this day. So we actually didn't take the trade, or I should say the potential entry could have been on this pullback. What I should preface this with, or should have prefaced it with, is that we didn't actually take the trade at that time. We wanted to wait for the news to come out, and that's exactly what happened. We waited for the news to come out, but by the time the news came out, it had spiked all the way down. It was well outside our entry target based on the exact criteria we used with the confirming entry. And so we had to wait for 2 more candles to create that pullback. This was the 5th candle, the last candle we look for a pullback, and it provides the pullback, hits our entry, and ultimately runs off to the downside. The close on this trade was at roughly 1.5%, and the reason that I didn't, you might look at this and say, well, it dropped 60 pips, why didn't you hit your take profit? We had news. We had news at 10 o'clock, and if anybody knows me, they know I don't carry into news that is capable of spiking the market more than 15 pips. Imagine you had, if you got burned on the SNB news, the Swiss National Bank letting go of their peg on the Euro Swiss. For anybody that got burned on that news release, if you would take to heart what I just said, and that is don't carry into news that has the ability to spike the market more than 15 pips. Not a single person knew that they were going to do that, or very few people, if anybody, knew that they were going to do that. But if you follow the rule that is this news capable of spiking the market more than 15 pips, and you just simply avoid it, you'll absolutely never get burned by something like that. So good rule to follow, and good principle to live by. It'll keep you trading for a long time. So anyways, 1.5% on that trade. That brings us back up to 21% overall. And then we continue on the same day over to the pound. We'll go over to the pound. And the trade on the pound, again, this is the 26th of May. And the trade was from one spot 53.75. One spot 53.75, which is right here. And what we had is we had a nice stop run of the lows. Really nice stop run of the lows here. Provides the break. We get the confirmation. Back to the upside. Here's the stop run here. This was kind of unique. This is a good example of how avoiding the news in this case protected us as well, because you notice this deeper stop run that we had. I'll walk through why we were able to survive this, or why we did survive it. And going into this trade here, what we had is and this was again a room trade that we had. So the 26, we have a break of the level all the way back here. We finally get the confirmation to the upside, but the entry would have been on this candle right here, which was the news-based candle. So as you guys know, I don't take, or the following candle is actually a news candle. But anyways, I'm not going to take a trade as this is pulling back because the very next candle has the news, and I don't carry into news. So what we did is we just very simply waited for the news to come out, took the entry near the lows, got a great fill on that trade, and then this one pushed to the upside from there. Beautiful trade, beautiful pullback, and went off and tagged 40 pips quite easily, put us up 25% on the month overall. Doing quite well at this point. Unfortunately, we had a crappy last trading day of the month, which, I mean, I guess it's still a great month overall, but 2 losing trades at the end of the month. 28th of May here, guys. So let's go to the 28th of May. We'll start off with the pound. It was a long trade from 53.06. 53.06 is again right here. Okay, so there's 53.06. And what we had is just another classic stop run of that level, pretty much picturesque type stop run. We come in, we get the break, we get the confirmation, we get the pullback, and we take a loss. No ifs, ands, or buts about that. Pretty straightforward and simple trade. We go over to the euro. Had a long trade on the euro, 0890. Low 890 on, again, the 28th of May. So 0890 long trade from 0890, and what that was, or where that was setting up, was right here. This was another room trade. This was a trade that I was taking in the room on this day. And it was rather unfortunate because I had said in the room that I was going to stick with the 20 pip stop. I was tempted to go to the 25 pip stop, but I didn't. Would have saved me on this one, but it is what it is. And unfortunately, the actual stop run occurred all the way back here. So we had the break. We had the confirmation up. Now we had news coming out here, and that's why I waited for the market to make a really deep pullback. Took the entry on the pullback, same thing I did on the trade a couple days prior, and had an absolutely beautiful entry. This was kind of a unique month because there was 3 or 4 separate times this month where we saw a stop run on a stop run. In other words, we get the initial stop run, but then after the initial stop run, we get another pullback, as we saw here, another deep pullback, and then it finally takes off. Now, that's not very common. It's just we just happen to see quite a few of them this month, which is a little bit unique, but it is what it is. Still a really great month. Ended up over 20% up for the month, based on all these trades. That is, these trades accumulating to over 20% on the month. Just a great month. There are hedge funds that would kill to consistently produce 20% a year. I mean, and that type of number is huge. Now, what I do want to say, just to be as open and transparent as possible, is number one, everything that I just covered here can be verified in the review. Every single one of the trades, you can see an actual video of me selecting it the levels hours in advance. So that's number one. Everything from that standpoint can be verified. The second point I want to make, however, is that, I don't want to cherry pick and make it look like everything is always sunshine and rainbows and lollipops. I do have losing times. I always tell people I tend to have at least one losing month a year. And I know that turns a lot of people away, and quite frankly, the people that would turn away, I probably want to turn away. If you think that every single day, every single week is a winning week in trading, well, then, if you're of that line of thought, you're probably 3, 4, 5 years into this trading thing, wondering why you can't get it. It's because you're chasing the pot of gold at the end of the rainbow. What you want to do is create consistency. That's what we're all about at DTFL. We're all about finding a very solid strategy, a strategy that stands the test of time. We went through 2014, and the strategy had the ability to maintain through one of the worst markets anybody has ever seen, one of the most stagnant markets anybody's ever seen. But because of its adaptability, it's able to produce in whatever market. Now, it may not produce 20% in that type of a market, but when everybody else is getting killed around you, breakout traders got absolutely owned. Trend traders got absolutely owned. The only type of trader that did halfway decent was a range-bound trader, and because the range was so tight, it was very difficult. So many traders absolutely just got smoked through 2014, but this strategy was able to maintain quite well. So again, I just want to give that disclaimer, because I don't want to make it sound like we're just every single day, every single week being profitable, because that's not the way it is. I do have downtime, but the bottom line is consistency, consistency, consistency. And what I'm going to show you here at the end of this video, or in the next video, is kind of a wrap up on what a percentage gain, what a certain percentage gain could do to an account over the course of 3, 4, 5 years, because the time is going to pass. You know, that a year or 2 year, that you can't stop time from passing, obviously. So what are you going to do today to ensure that when that time does pass, when it comes 2 years from this day, from listening to this video, where are you going to be? Are you going to be right where you're at right now, chasing something that hasn't worked to this point, or are you going to be progressing, moving forward? So what I just try to preach is consistency, guys. Trading is not easy. Trading is very difficult, but if you can find something that produces consistency, don't try to chase massive gains, slow and consistent, you can be a full-time trader in a relatively short period of time. You have the ability to be, the possibility to be, if you work at it. So the next video is gonna really illustrate the importance of compounding and show the importance of it. I hope you enjoyed this month breakdown of all the trades. I know it was a little bit boring, but just to me it illustrates the power of what we have to offer at DTFL, because everything again is outlined hours in advance. You have a ton of time to take advantage of what we're doing, and then the entry is mechanical. And on top of that, for anybody that wants to trade an automated system, one of our members created the DTFL Pro, which is actually an automated EA that will trigger these entries automatically. All you have to do is input the levels that I select every single night, and it will automatically place the trades as you reach those levels if a valid confirmation entry comes about. So guys, there's so many options. If you're struggling in Forex, or if you're a member and you've strayed off, you've tried to chase the pot of gold at the end of the rainbow, I would urge you to shoot us an email, let us help you get started. And again, especially if you're a member, shoot us an email. Let us help you get started. If you're not a member, shoot us an email, and I'd be happy to talk with you about what we can do to help you learn how to trade. So that will do it for this video. Look out for the next video that's going to break down the power of compounding. I really think it's going to be a helpful video for you guys. Until next time, happy trading.